12/21/2011, 5:34 p.m. Pacific Standard Time, and we thought that we would do a late Christmas market recap on the S&P 500 daily chart. One of the primary things that we are going to focus on is this green line, the 200-day moving average, once again. One of the things about one of the key moving averages on the 100-day moving average, that one is going down in the value chain. Yes, we are up at the highs. Once again, we're going to see if we can get that rally to the upside up to around the 1288 handle. Okay. And these major tops that were right over here where the reversal started here, it comes up, it tests it, and it does what it's supposed to do and goes down. So once again, we had three passes slight below that simple 200-day green moving average line. Okay, so it's very clear that when you look up here that there are other price levels right below the 1300 level in this video right there. Bam. But it would take a lot to get the bull off the sideline, even with all of the Europe contagion supposedly being out of the way. All of a sudden, every single bank in Europe was wanting a handout to get capitalized. I wonder what that situation is going to turn out to be and how long that will last. Similar, another TARP in QE3 is coming our way if they slow down in the economy, that is. Which we believe that 2012 may have some problems. So why are we going to sell into the rallies? We're going to sell into the rallies above the 200-day simple moving average, and if we get up above it, then we'll break out and we'll let our positions run. But when we come up to it, if we're not closing above there and staying, we will continue, yes, to make markets here and go up and then sell into it. Yes, the profit ranges are narrow, however, they still pay. They got a daily buy signal. Merry Christmas to everyone, and it's been a wonderful week for the markets, and they had the big daily movement right down here. Just remember that was that 1200 neckline that we were talking about, and we didn't quite break it. We got awfully close to it, but we never did break it when we started up there with that big short squeeze, and that was the upside Europe news that was in play. As far as a holiday month, a holiday week, with the kind of volume that we have and how the index is weighted right now. Once you do close above the 200-day simple moving average, that's going to bring that money off the sideline. That's where they're going to want to buy. Should that case be case A, we will still be shorting into resistance levels up on the top. So we'll be monitoring where this reversal fails, and it has to stay below this particular resistance line right here, right below the 200-day moving average. And then you would have to see a daily red bar start. Okay? And it has to start with the reversal like this, MMTs. So having said what the daily is, let's take a look at this weekly chart. And on this weekly chart structure, you can clearly see that it has a bullish tone to it, as it does, from that very low right here and from this very top right up here. We're right in that weekly level. The thing that makes it bullish is that you're above the 10-week moving average. And that is the New Year bull case for the bull. So the bull has something going positive in that respect. The bull also has something going in positive respect for the New Year. It's because you're holding that 100-week moving average right along with the 20-week moving average, and you have a nice support level of the weekly breakout bar on this test right here. And you could say that yes, you are in this type of area, this consolidation. However, either you're going to break up above here and test that 50-week, or you're going to break below the weekly moving averages. There's not going to be anything in between. One will break up into the resistance areas. Here's the top of that area that we're looking at on the weekly chart. That's 1289 right there. However, when we really can take a look at the whole part of that weekly trading zone for 2011, you can clearly see when we got down to the bottoms over here and these reversal tops. Look, in order for a bull run, for the bull to happen, you're going to have to close up above here. You have to get a closing above 1300 to come back up and even think you could see that high. Now, it would take a slew of earnings reports in 2012 to do that, but we think rather not in the first and second quarter of 2012. What we believe is that things will have to have a shakeout before the next big breakout. And yes, for the bulls, listen, if all of the austerity wasn't in the way, the S&P could go a lot higher. And the thing about it is that we want to stay focused in this weekly range in that 50-week key moving average right there. You're getting close to a weekly buy signal, but let's see where the weekly percent DS is here at 72%. But notice how the weekly high so far is not higher than the previous week. Notice how the highs are getting lower, MMTs. And that's the very choppy zone on a weekly level. And you can see that this lower trend line down here was a major artery in this whole weekly shakeout period that we had when we finally hit that 1075 with that up move reversal. And once again, moving into the new year, if I get a weekly reversal and sell back below this trend line and start going this way, the 200 week is down here. Not only that, the 200 week is declining in value, so that means that these upside movements right up here, it would take a very good bull light volume rally to get us there. So we'll be looking right below the 1300 handle for the bull, and for the bear, we'll be looking for a break below the moving averages with a weekly red bar that starts at the tail end of the year and or moves into the beginning of the January 2000 trading year.